What's up guys, it's your boy IpBoyles back again on this YouTube channel. Today have my jotter here. So today this jotter contains my trading plan and other things, although I'm planning to buy a new note jotter that will contain more new things of my trading in this new year or in this 2023. So today I'm going to guide you guys through on how you can create your own trading plan. This video I have my trading plan right down here, so I'm going to get a biro, so you can get a book and a biro, write things down. So if you are getting your trading plan doesn't need to contain a lot of notebook. Your trading plan can be on a 2-leaf book. Like you can see I have this is the first page, and here is the second page, and this is the third page, which is the last page. Plan is like your questions which you are going to ask yourself. Want to learn about supply and demand, how to trade supply and demand, you can check down below. In this video, let's get to it. So if you have a strategy already based out, so these are things you are going to ask yourself. These are questions that I asked myself when I was creating my own trading plan, because these questions will be like mistakes which you have made in the market. Even though you have learned a lot about the market, the mistake which you have made in the market will be you use it against the market. But one which I wrote down here is that, first of all, I asked myself before I'm starting a trading, I asked myself, how much money can you fund your trading account? I know amount that I can fund my personal trading account before I can start trading. So that's the first question which you're gonna ask yourself: how much money can you fund your trading account? So you can write it down on your trading jotter if you have your trading jotter around you. So the number 2, how much are you willing to risk for each trade? So this is an important question. You must know how much money to risk on your each trade that you take. You cannot risk more than 1% of your account if you have above $10,000 or $1,000 to trade. So below that means you'll be risking 5 to 2% of your account in a particular trade. So there are reasons why we can't risk more than that in a trade, because there are some situations where you enter a market will push out your stop loss. If it push out your stop loss, doesn't mean that it will not still go at that your direction. It can still push you out and still go at your direction. So if you can catch up on a winning trade, you are able to risk twice, or sometimes you risk one, and it will have you have a good winning rate. The number 3 is that, what is your criteria for your entries? So you need to know your criteria for your entry. What makes you enter a trade? What confirmation do you have to know before you can trigger your entry? You cannot just find a setup and just jump on a trade immediately. You must have a setup, you must have a criterion, you must have a confirmation that makes you enter that trade. So that's why some new traders don't really know these things. They just jump in on a trade once they see a setup without not knowing what criterion or what confirmation, what confluence will allow you to enter in a particular trade. So that is for the first page. You can see everything. The first page is only 3 questions. So I'm going to the second page. So my second page is the fourth one. The fourth question goes like, where will you take profits? So you know everything. Once you have your strategy mapped out, you're taking your profits. I can't tell. That's why everybody trade each their own pair. For me, I'm taking profit in TP1 at 40 pips. So that's for me. I don't know for you. If I do my analysis and then I didn't find a good, more structure that market can break to go down or to go more up, so I will take, if I have a maximum TP of down my first TP, that means I will be taking everything out from the positions. I'll take all my positions out. So the last one is the maximum TP2 will be the next fresh zone. So I always trade supply and demand. So the maximum fresh zone is 60 pip. That's my maximum TP2. So once the market does everything that is in and hit my TP2, I will be out from the market. I wouldn't leave it that even the market move more 70 pip or 80 pip down below or up, was against my or to my position. So once it reached 60 pip, I'll exit. That's why sometimes if you're on my Telegram group, I always say the market smash 60 pip of our TP today. So I always take 60 pip of profit in my trading. Fifth one, which question you are going to ask yourself is, what is your plan if the trade does not work? You see this kind of tactical questions, because these things, when trade doesn't work, you get to be mad. That's when your psychology starts going wrong. That's when you start being afraid of things. If trade goes against you and hits your stop loss, then you don't know what to do. You don't know if some people will be like, they will jump in, they will add more position. If they are risking 1%, they would like to add 2% to recover the one that they have lost. Trading doesn't work like that. So what will you do if the market goes against you, or if the market doesn't work? My answer was, I will exit with 1% risk stop loss and close for that day. So that is me. I will close for that day even though the world market reach my stop loss of 1%. The sixth question is, where are you putting your stop loss? This is an important question. What is your stop loss level? So for me, my stop loss level is 10 to 15 pip maximum above my zone. So that's my stop loss level. It depends on the type of zone. If the zone is more than 15 pips stop loss, I will make sure that I capitalize on a setup or wait for confirmation, which I will take place. I will place my stop loss 10 pip or 15 pip above that zone. Neither I enter at the equilibrium of the zone, or I wait for confirmation to trade that zone in a proper way. Point one is, what is your criterion to move stop loss? So this is another important question. What is your criterion to move stop loss? This is all about you closing some partial profit of your trade if the market is going on your favor. My answer was break even if price reach 1:2 risk to reward of my risk. So what is risk to reward, or 1:2? 1:2 is 2 of my risk is 1:2 risk to reward. So if I'm risking 1% on a trade and the market moves 1:2, that means I'm making the 1% times 2. So if the market moves times 2 of my profit, or the market give me times 2 of my risk, I'll be closing half of my lot size on that trade, and then allow the other ones to hit full profits. So this is how you start breaking even on your trades. The eighth one is, what is your target money to withdraw? So this is an important question which you will always ask you. Not only trading, you need to be trading profitably. Every trader needs to always be withdrawing money on monthly basis, neither on monthly basis, on weekly basis. So withdrawing money will give you a breathing space, not having anything to lose again in the market, because once you withdraw your initial balance that you are risking, then you know that you are now holding the market money, or you are now holding your broker's money, so you have nothing to lose again. I will be withdrawing 10% of my account monthly or weekly, so it depends on the amount of money you are trading with. No matter what, always make sure that you always withdraw of your profit once you make profit. So last one is the ninth one. How many trades do you take in a week? I trade only 3 times in a week. I have backtested my pay. I trade only Euro USD, and sometimes I look into gold. So I trade from Tuesday, Wednesday, and Thursday. I don't trade on Monday, and I don't trade on Friday. So that is what I do. Me trading on Friday is based on if we have a high impact news like NFP, because NFP always comes on Fridays, last week of the month, if I'm correct. So if I have to trade in a week, I know that Monday setup, I'm not gonna trade it. Don't hesitate to subscribe to this channel. It doesn't cost much to just click on the subscriber bell button and like this video. You can also share and comment. Thanks for watching, and peace up. See you guys on the next one.